I am not a financial advisor, and I never give financial advice on this channel. 100% of this content is for entertainment purposes only. Hello everybody, hope you're all doing well. It's Lane here with MetaShackle. This is the part 2 of the previous series that I started going over the ISO 222 cryptocurrencies. All of these are on the 4-hour chart. So let's not waste any more time and let's get into the charts. First, taking a look at the HBAR chart, you can see that we had this descending wedge pattern here, which we broke below, back up through, then back down towards the downside, essentially giving us a fake out to the downside with a fake confirmation sweeping the previous low, breaking out to the upside in a fake to the upside, then breaking down to where we are currently trading. The bullish order block right here that's centered at about that 14.88 cent range held beautifully. The candles barely penetrated into it, not even hitting the 50% mark, with bodies barely forming in the top quadrant. As you know, price broke out this morning on many cryptos, and we're starting to see a move to the upside, moving through this first bearish SIBI right here on the 4-hour chart. There are quite a few areas of potential resistance moving up through here, up to the equilibrium zone. Price is trading below the Gaussian channel, which is bearish, well below the 200-day moving average, which is bearish, and also well below the equilibrium zone, which is bearish. But if there was going to be a turnaround point on the charts, this would likely be that area, as you can see it trading sideways here, which may indicate an area of accumulation. And I do think that we're about to see HBAR put in some really hard work here and make an attempt to move back to the upside. The equilibrium zone acts as a magnet, drawing price to it and repelling price from it. So it's very likely that at some point throughout the next couple days, perhaps a week or so, we could see price trade right back up here towards the equilibrium zone. Overall, even though the chart is bearish, we could see it turn bullish rather quickly. So watch for these targets to start getting taken out one by one, moving towards the equilibrium zone. And as each of these targets are taken out, you will see these replaced with bullish fair value gaps in the form of BISIs, replacing them, building support underneath as it moves higher. There's a good chance that we could see a retest here, so keep your eyes out for that. Overall, I like what I'm seeing on the charts, even though it's bearish. Now taking a look at the ALGO charts. This chart looks very similar to what we were seeing in HBAR. We have this descending wedge pattern here, but we broke to the downside and got pretty close to a retest before coming down here to the current range, sweeping this previous low right here, but not quite getting to the bullish order block, which is a good sign. Price is trading below the Gaussian channel as well as below the 200-day moving average and well below the equilibrium zone. Just like what I was saying in HBAR, we're starting to make this move upwards, which could be a good sign because we want to see these targets start getting taken out one by one, knocking out the resistance levels and building bullish fair value gaps below it, acting as support along the way. We may get a retest of this lower level as we do have a weak doji right here at about that 17.5 cent level. And as you know, weak dojis act as great areas for price to target. So if we do get a retest of this area, we would want to see a quick turnaround moving upwards. But if price does go for a retest, breaking lower, sweeping this previous low, for example, we have this bullish order block sitting right here, which is likely to act as major support right around that 16 cent 7 level. So all in all, this chart is still bearish, but these are the times when you want to establish a position and start to accumulate as it becomes more bullish. You don't want to chase price because there are a lot of people out there that will wait until we start taking out these highs, perhaps even getting through the equilibrium zone when everything looks great, chasing price and missing a big part of the move before we even get to that point. So when it comes to trading, you always want to be thinking about these things in advance, accumulating in times when it's bearish and it doesn't look so good, and selling that into the momentum in times where price is moving up and looking very bullish. Overall, I have the same feeling about ALGO as I do HBAR. Even though the chart looks bearish, I like what we're starting to see here, especially to where it's held above this bullish order block. Now moving on to XDC. This chart also looks very similar to what we saw in the HBAR charts. With the descending wedge pattern here, we broke out to the downside, broke out to the upside in a fake out, had the rejection point right here around the 50% quadrant of the equilibrium zone, fell back through, traded all the way back down here to my fib levels, not quite taking out the previous low, but we're starting to see a little bit of momentum here. Price didn't even come close to hitting the bullish order block here, centered at about the 5.5 cent range. And just like the previous two charts, there are multiple levels of resistance above it that are going to make it challenging to get back to the equilibrium zone, but not impossible. Price is trading well below the equilibrium zone, well below the 200-day moving average, as well as below the Gaussian channel, which is now red, all of which are bearish signs. I am a fan of XDC as far as the long-term perspective, but one thing about XDC is it has the ability to make incredible gains very quickly, but can almost never hold on to those gains. XDC is the king of bleeding out. So if you are an XDC holder, it's very important to take profits with percentages of your holdings, in my opinion, which is not financial advice, to hedge yourself against decreases in price. Many people will talk about hedging yourself to the downside, but very few people talk about hedging yourself to the upside. And how you do this is by taking profits, laddering out of your positions in 5, 10, 15% increments, taking profits along the way. So if a big downturn does come, a percentage of your portfolio is already in the profit range. But even though I like XDC long term, I absolutely hate it in the short term. You can see how it makes these big moves out of nowhere and then sheds them just as quickly as they occur. So XDC, in my opinion, is the riskiest ISO 222 token that you can trade, but it also presents volatility in ways that many of the other ISO coins do not. So if you're a day trader or a swing trader, it may present opportunities for you in regards to placing trades, but not necessarily be so kind to the long-term holders. And if you've seen one of my previous videos, you know that I've predicted that over about the next 7 to 10 months, we're very likely to see XDC go back down to about the 2.5 to 3 cent range. That's a long-term prediction. I'm not saying that that's going to happen in the short or medium term. It's going to take 7 to 10 months for that to come to fruition, and it will likely be after an incredible run occurs. So go back and watch that video if you'd like more information. But overall, even though the charts are bearish here with XDC, I do think that it's presenting some opportunity. And if it does turn to the downside, I would watch this bullish order block right here, starting at about that 5.5 cent range. Even this lower trend line right here at about that 0.057 range, both of which could act as major support. Moving on to XLM. Price traded down below this upper trend line, down in this wedge area here, tapping the bottom and trading below my fib levels here in the red, but above the green right here, which is a good sign. Price traded up through the trend line in a fake out, getting rejected off the 200-day moving average, as well as this bearish order block right here, centered at about the 28.5 cent range. Price traded below that, took out the prevailing order block that was here, and has now replaced it with a much smaller order block on the 4-hour chart. This morning, price broke out above this upper trend line, has taken out this bearish SIBI here and here, but I've kept them on the charts just to show you, and is very close to cracking this one as well. Price is trading well below the equilibrium zone, below the 200-day moving average, but has started to crack that 50% mark within the Gaussian channel, even though it's red, all of which are bearish signs with the exception of trading above the 50% mark. This is the first good sign in those regards, as well as breaking through this trend line here. All in all, I really like what I'm seeing on the charts here. There is a weak doji waterfall right here that's not marked on my charts, which could likely be taken out very quickly, sitting at about that 28-cent level. If price does fall back down, as it is creating some volume imbalances in this area, and price might come down to retest these and fix those inefficiencies before moving back up. If that's the case, I would watch this weak doji right here that's right at the top of this bullish order block centered about that 25.5 range. As far as the upside targets go, I would watch this weak doji here and see what happens when we hit this bearish order block, taking out this previous high right here. Because in order to get back to the equilibrium zone, which draws price to it like a magnet, we're going to have to take out this bearish order block, but it is only on the 4-hour chart, so it's going to be a lot easier to break than if it were on the daily. All in all, I really like what I'm seeing here in the charts, and I think we're going to get a lot more information over the next couple of days. This week is going to be very important to help us determine what could be happening in the short and medium term. So this is one we will definitely want to keep an eye on, as well as XRP, as the two are correlated with. So I like what I'm seeing here. I think there's a lot of potential. For additional information and exclusive perks, do consider joining me on Patreon. Now, moving on to the greatest cryptocurrency that has ever existed in history, and one which is likely to become the agnostic world reserve currency in the very near future. As you can see here, and as I talked about in a previous video, XRP has formed a very nice inverse head and shoulders pattern. I started talking about it when price was trading in this area before it had formed this upper neckline. Price has now traded down to the bottom of this, creating the right shoulder, bouncing off of this bullish order block at about the 2.09 level, and is now working on coming back up here to finish off the pattern. It's probably very likely at this point that once we do get up in this area somewhere towards the equilibrium zone, that we could see price come back down for a retest, which will likely be in the area right around here, at about that $2.19 level, as it has formed a small bullish fair value gap right here that you can see. Price has taken out these bearish SIBIs one after another, as well as filled all 4 volume imbalances on my chart, which I knew was very likely to occur. Price is struggling right here at this bearish SIBI, as you can see, which is exactly what happened last time it reached this area, since forming back here on May 27th. There are quite a few volume imbalances that have formed on this recent breakout here, here, and here, which are likely to get filled at some point, likely on that retest. So I would watch this fair value gap here, as well as this weak doji right here, which is at about the 216.5 level, as this is a likely point of reversal. If price does fall below that, I would watch for the bearish order block here, centered about the 208 range. But a lot of times, these inverse head and shoulders patterns do fall back for a retest previous to breaking out, which is probably very likely to occur. I do, however, believe that we will not see price come down below this 205 to 207 price cap range that I have marked in the yellow on my charts right here, with a worst case scenario range being right here at about 196. I've been talking about this range for quite some time now, and even the bearish news coming out of the Middle East about the war between Israel and Iran, it was unable to even get down into this box, being stopped cold here within this bullish order block. Price is now trading above the Gaussian channel, which is bullish. It's now trading above the 200-day moving average, which is bullish. Still trading below the equilibrium zone, but price is being drawn to it. I think that somewhere in this area, between the lower quadrant and the equilibrium line here, is where the decision will be made on whether or not price is going to break through or retest these lower ranges. I think it's more likely that we will come down and fill these inefficiencies before moving upwards, but if we do break through this equilibrium zone here, which is going to be challenging as we have a bearish order block centered here at the 240 level, crowned by this bearish SIBI here on the daily, right around that 248 level, both of which I have talked about numerous times over the last month or so. But if we can get through this bearish order block above the equilibrium zone, we have a really good chance that we could break through this. And if we do, we are going to much higher levels, in my opinion. And if you followed my channel and you followed the information I've been giving out, you know that I believe we are going to see a breakout of the upper trend line on the weekly chart, which I will be going over more, and I know a lot of people disagree with this, but I do believe that we will see the XRP breakout chart at a minimum get outside of that trend line, which would keep the chart pattern alive. If we do not see the breakout in June crossing through that line, breaking to the upside, then it's likely the chart pattern will be broken. But we still have 2 weeks to see if this pattern is going to play out or not. But overall, I would keep your eyes out for a retest of these lower ranges, starting with this trend line here, this lower fair value gap here, and each of these inefficiencies that have formed in the form of volume imbalances right here, here, and here. Somewhere in that area would be our likely turnaround, moving upwards and completing the inverse head and shoulders pattern. So thank you so much for watching this video. I appreciate each and every single one of you. Good luck and have a great day.